So nice, Maddie. Well,
Did
look,
he
I'm already
did he
excited
just
for.
tell the truth? He zones out on all the other segments.
He
Hmm.
might have he might
Mm-hmm.
have let that
Mm-hmm.
that slip. But
Mm-hmm.
let's be honest, we kind of probably thought that already, right?
We most likely did. Yes.
We just got
Yes.
some confirmation.
Not breaking news over here. No. No.
Not at all. I'll tell you what, Maddie, I'm looking forward to next Friday because when we get to next Friday, the bulk of the earnings are behind us, right? This is still
Agreed.
I was complaining to Matt, and I do it every single quarter, even though I know that the week after this week is super heavy on earnings. It feels like I've waited through so many this middle week that I almost feel like I should be done, and then I'm almost surprised that I'm not. Right, so I'm looking forward to earnings season winding down and starting. Next Friday, I think we'll be in that spot, which really limited the candidates. But I got a few I'm looking forward to talking with you here today, Maddie. A relatively short list for me, but you want to kick us off? You want me to kick us off today?
It is a relatively short list for me as well this week. Heart of earnings season. Obviously, the earnings reports that just got announced are kind of going through their post secondary earnings analysis. You still got a heavy dose of earnings coming down the road. We're only about halfway through earnings season. We're not even halfway through earnings season. Can you believe that, Frankie? I know I just depressed you.
You
Um,
did.
but here's the good news. After next week, we're late
Yeah,
stage earnings season.
yeah.
That's it
Then
goes quick. It goes
it goes
quick,
quick.
right?
Yeah, it
It's
goes quick.
these 2 weeks. It's this week and next week that
Yep.
are 330 stocks in the S&P 500, right? The other weeks it's 50, 30, 70. But these 2 weeks, it does get hot and heavy. So it's limited out there, Frankie. You know what? You're short. You're first.
Ooh, all right.
Yeah.
I'm
I
going.
obviously wanted to buy some time over here.
There you go. There you go. Well,
Thank
all
you.
right, all right, all right. The challenge, outside of the limited, watch list this week because of earnings, is we as you kind of detailed, is and looking at the broad market running a little bit hot, which can make just for difficult risk to reward, right? Control,
Yeah.
something that you really like. But one thing I think is an interesting risk to reward spot is Foot Locker, FL.
Foot Locker.
Yeah, I've been to
You know,
Foot
I
Locker
I kind of like it there, Frankie. Talk to
to
me about it.
to buy me some shoes a few times. That's where I got my Birdmans, if I remember right, back in the day. You got, you were struggling, right? You had that big, nasty last earnings candle, right? Struggled, rallied up, traded a higher low, and have really kind of flatlined, and chopped sideways for much of the last month as it's kind of just hovered below the 50. Now, yesterday we were able to close the 50-day moving average. That was the second time that happened. It happened on the 24th as well. But today is the first time we've got any follow through of the close of the 50-day moving average, which is also lining up right at that old high from the fourth, right? Right at that old resistance level. We've given those short-term averages a chance to kind of flip-flop and start to try to push us through. I wouldn't call this a pinch, but kind of the same philosophy that nine trying to springboard us through,
Yeah.
right? Through that moving average. We do have a relatively decent sized window into. I'm looking at the highs back at the beginning of March, about $45, Maddie, as kind of that first window where I'll deal with the second window after that, the high back in February and where we kissed on that earnings announcement. But we do have a fairly decent little window. I think if we can get a little bit of follow through, I think you could call it just above today's candle confirmation personally. And looking at just nothing, not a home run, but just trying to work back up into that $45 range. Stop loss wise, I think you're kind of dipping below basically the 9 EMA. You want to be below today's low for sure, but I think you pay a little bit more. Make sure you are kind of below that combination of that 50 and most importantly, that rising 9 exponential moving average puts us somewhere in the 4140, 4150 zone as far as stop loss is concerned. But that still gives us a pretty healthy, 2.5 or so, maybe a little bit north of that to 1 on the risk to reward ratio into that 40, $45 range. I've got it like 44.68 is where I have my target at, but it is definitely a little bit of a range in there. And then in this one here, because there's nothing that really stands out, me, Maddie, I'm either going to go 1-to-1, which is kind of the default setting, right? If I don't have something to target to T1 before T2, basically 1-to-one's a sensible thing. An ATR is a sensible thing. This is one of those that you are kind of targeting up into that mid to high $45 range, and then whatever you're doing for T1 is kind of your preference versus mine.
Yeah, I like it here, Frankie. It's not very clean on a multiple time frame perspective, but outside of breakouts that need to be cleaned up, not a lot is right now. You clean here on the daily chart. You're getting above all the moving average. Looks like a pretty clean journey up into that first target, no doubt about that. Like the call out, I was looking at Nike earlier as well. The only difference is Nike's got that short porch to the left here.
I like the entry, and then I look at that shelf, and I'm like, is that how worried am I? Right?
Yeah, I didn't catch Foot Locker, so I'm glad you brought it up, because I was kind of staring at Nike a little bit this morning, saying, can we? And the answer was no.
I did too.
Right. And so I like the Foot Locker call out there, Frankie. I'm going finance on my first pick. And you might be thinking, Matt, First Republic just went out of business. Like, they're literally going FDIC right now. And they're like, yeah, I agree. They are. It's a terrible company. I'm not pitching First Republic here. What I am doing, though, is I was debating two financial companies, Frankie, and I'm willing to debate these two financial companies. Will be a debate on the scouting report later on today. Goldman Sachs was one of them.
Yeah.
Goldman Sachs looks pretty pure here. But then I got to talk about Goldman Sachs in a public channel. I'd rather do that in the scouting report. So I'm not going to do that here today, Frankie. I'm going to bring in an insurance company, Frankie, out of the financial space. Marsh and McLennan here, Frankie. You may not have heard of them. They got on my radar this week, had a really good earnings report. First and foremost, just think about last quarter. They came out with 147, this quarter, 253. That's a real good bump up on an earnings position. We talk about secondary analysis on an earnings position all the time. Nobody's going to come in and say, hey, let's bar by bar, Marsh and McLennan after a parabolic move to the top side. No, we're going to say, let's see if we can match momentum with momentum here. How many times have you heard either Coach Frank or myself break down a momentum stock on a momentum analysis, saying, hey, if you got momentum and trend, you want to match with momentum and pattern. And that's what we got here. You have momentum and trend. You had a power move to the top side following the earnings report. You're absolutely going to be on secondary pattern watch. We got a flag into the 9, kissed off the 9, power move back up. You're talking about a confirmation breakout here today. That's what I like about it. You come out here to a multiple time frame perspective, Frankie,
really like.
And you're breaking out of everything here. You got to like it. It's a simple trade here, Frankie. It's a bar by bar because we got a confirmation candle here. You're just above the closing candle again, because a test above resistance does not mean it's a confirmed breakout. Confirmation is a close. You got to see the close and then trigger above the high on that confirmation candle. Right now, based on the price, that'd be 180.73. Stop loss here, Frankie. I think you can just gauge the 9 and test the 9. Look at the power trend over the course. Never even touched the 9. It got close. Well, what does that tell us? That tells us if we want to catch this trend, if we want to catch this trade and hypothetically go into a trend, you don't want to get stopped out prematurely just because you're too tight against the price action. Give it a little bit of room, like the 9 EMA there. And then, Frankie, when you're breaking out of legitimately everything, it is oftentimes very difficult to target. Do you target 183? If you do, you probably don't have a trade here, Frankie. I think you're in a slow journey up into $200, whether that's T1 or T2. Most likely that's T1. We're talking an insurance company here, even though it did go parabolic. A parabolic move on that insurance company was 20 points against $175 price point. That dollars aren't the same on an insurance company versus, say, one of those big dog flyers out there. So I think you can just target 190 by 200 and call it good here. More than anything, I like the analysis going into it. Let the target take care of itself a little bit through trade management. What's your thoughts?
Yeah, and I really like the 200 as a target. And again, whenever you're targeting at highs, you are making educated guesses, right? You don't have anything to latch onto.
Yeah.
But that's about coming out of that range would take us into that big round whole number. I think that's a very sensible place for target. I really like it. I mean, that weekly chart is a thing of beauty. It is absolutely.
It does look good, doesn't it? All right, so we got Foot Locker, discretionary. We got MMC, Marsh and McLennan, an insurance broker out of finance here. Frankie, what's your second pick?
All right. You know what? Decisions.
I know.
When you only have a couple, and I'm pretty sure you're going to steal one of them. Just knowing how it goes. You know what? I'm going to go.
The one I was going to do. The train left the station between the time we got onto the report and now. So
that's I know
back
that's
to the drawing board.
I had full intent to go, Las Vegas Sands this morning. It was shaped up really nicely, hit the trigger point that I had for it on that post earnings flag. I snapped a picture through it in the step channel. Thought, there's an easy one for Frank's chart today, and now it's like, well, it was easier $1 ago. So
it was easier on the flag confirmation versus the breakout.
It was.
It's still good.
It's still there. Yeah, I mean, listen, if you played the flag, you weren't all that worried about that high there. But you know what, Maddie, I'm not going to go that route. I'm going to go with XP. I'm going to go doing a little bottom fishing.
A little bottom fishing, reversal, secondary pattern off
little
a reversal.
I like it. Let's hear it. You got the bottoming pattern right. And what's super cool about these guys, well, there's a couple of things, but they had spent the last 2 weeks, that top that they had formed was right there at that 20 weekly, right? And so that makes sense, at least to me. I always expect the 20 weekly to cause some problems, and no surprise that it did, but we're now pushing through that 20 weekly and entering into a really nice pocket until just a little bit over $16, which is where you're going to find the 9 monthly. And so you are now moving into that spot on the reversal where you fought through all of the moving averages, the short-term averages, the 20 and the 9 weekly, and now you're working into those moving average pockets, which is always something that I look forward to being part of, because I do believe in those moving average pockets or windows, if you will. I think this one's fairly straightforward. We got a couple weeks till earnings, so we're not going to be on a super tight leash. Just working into that $16. I'll call it 16 for a target price. Might be a little north of that, but that 9 monthly will fall a little bit, and I think 16 works perfectly fine. You're probably going to be looking at this as a bar by bar in this scenario. I don't really feel, especially knowing that it probably doesn't fire right through the 9 monthly. Even if it breaks through, it probably needs to consolidate or have a shallow pullback at the very least. And I don't have time to sit through that before earnings. And I'm definitely not going to sit through earnings on this thing. So I'm probably just not going to be able to make that a secondary target work. Normally I'd probably say, let's work to the 200 here as that secondary target or something along those lines. I just don't think you have time. And I think you have to consider, the management just as much as the actual date on when it comes to the earnings. So you're probably looking at bar by bar, which I think is fair. Above today's high, below today's low, that should get you the 9 EMA very, very quickly as well. And you want to pay a little bit more, you probably could afford to get it. And you're really targeting up into that 9 monthly that's going to put you in that $16 range. I think the actual number is like $16.50. So maybe we'll call it 16 and a quarter, 16.30, a little bit shy of that 9 EMA would be my target price.
Like it all, Frankie. Like it all. Good little reversal pattern, secondary pattern, all following a nice solid W. Makes sense to me. Frankie, I'm looking at my second pick, and it left the station. So I'm going to go to my third pick, and I'm going to replace my second pick here in a minute.
There you go. You're like the Houston Texans. They did that last night in the draft. I
am pulling a Houston Texan. I my second pick didn't work out. I went to my third. Now I'm going to embrace my second again. That's how it worked out for the Houston Texans.
2 nice players.
Very nice players, actually. Very nice players. They did good. We'll see if I can follow suit. Frank, I'm looking at housing here. I'm looking at housing, and I'm looking at DHI.
All right.
And DHI, real good pattern here. good momentum move. Secondary pattern is cleaning up. Looks real clean above resistance as well. I look at Lennar here, and I'm like, wow, I don't know what DHI looks good. Lennar looks good. Okay. All right. Maybe we can break the tie with Toll Brothers. Nope. I'm looking at Toll Brothers. I'm like, okay, that DHI looks good. Lennar looks good. Toll Brothers looks good. Let's see if we can go off the beaten path a little bit. Let's go to Pulte. Let's go to PHM here. Overextended, no trade, certainly continuation momentum. You could certainly bar by bar, but then I'm like, wait a sec, did I just say bar by bar a residential construction stock in the industrial space? No. We're not going to do that. we're definitely not going to do that. Then I go to KB Homes, and I'm like, maybe we can get KB. Nope, got a bar by bar KB on the breakout to the train left station there. And then I go, you know what? Let me go look at a micro company just to show you some. You want to see a power move here, Frankie? There's a power move there, Frankie. Look at that one.
There you
go. Beezer Homes. Somebody's getting paid a bonus here today. Looking fantastic, but try to find a trade on that. So I'm looking at housing here today, and I'm looking at the last couple of months of housing data that has been pretty decent. It's been a recovery through from what it was. Last 2 months of housing data, new home sales, expectation was dire. They came in above that expectation. Housing's bucked that concern for a long time now. Looks pretty good. So I'm like, which housing company, Frankie? And I don't know. And when you don't know, and you don't want to live through all the earnings, because there's some that have earnings next week too, XHB makes some sense here to me, Frankie.
Yeah.
XHB looking on a potential breakout. And again, I don't have any issue with any of those other ones. Like, you got to break out a real clean breakout in a lot of those individual components. I'm just saying that an alternative move, if you don't want to take the individual component, is to come to the ETF and say, let me get the diversified approach here, so I don't take a single stock risk to this single stock volatility. And so if they all look good, well, probably the space looks good. That's what we're talking about. Trade here, Frankie, you're just looking at above the high of today. Stop loss would be underneath the breakout channel here. You would have to be targeting the high over here as T1. When you break it out on the weekly chart and you look at that kind of that T1 though, Frankie, if you achieve that and then break that, that's where it gets good. That's where it's not great. It's a base hit up until this level. It gets real good as it breaks out of that 72, 73 level, because you don't have anything until you start working up into the high 70, 79, maybe even $80. And so it looks really good for the space. Don't have any issue with that. Now, if you do want to look at the Toll Brothers of the world, that's a clean breakout against 65, has no overhead against it. When you look at Lennar, clean breakout, not a lot of overhead against it. And then DHI, which is the more of the growth of the bunch, which did have the positive earnings report from last week. This would be that secondary pattern. So I don't think you go wrong here from a cleanliness perspective. It's just a matter of, do you want to take the single stock risk and which can be volatile, or do you take the more conservative, diversified approach with the XHB? Either look good to me. Frank, you just want to talk housing here. What's your thoughts?
Yeah, I like them. I like KB Homes as well. But yeah, you're kind of talking about, preference, right? And you expect
I just want to show our
in the space, and I think
there's ways.
I think it's a great way to look at it. There's absolutely nothing wrong with playing the super liquid option like XHB. Definitely on my radar as well. KB is the one that I've attached myself to, but as you pointed out, the theme, they're running on the same gas, right? It's not like
of them are.
It's not like KB Homes is going to drastically over or outproduce XHB or any individual. They're
all going to run down.
Maybe they're a little better, maybe they're a little worse, but yeah, I like the space and the break that you're seeing there as well.
All right, you had two bulls, I had two bulls.
Yeah, I got to go with bear. Here.
All right, I got my bear.
You got your bear? Go ahead. Yeah, I got a bear too.
What's your bear?
A couple things you're going to need some some movement, or like the doji, right? Need a doji, like UPS, for example, filling up on this, gap down, secondary analysis on its earnings, but you can't prep something on that just yet. So a lot of the need a dojis, but who doesn't need a doji, Maddie, is Nordstrom. I hate to do it to you, Nordstrom, but listen, if you're not going to get the job done, you might find your way on Frank's charts on the bear list. And these guys have a pretty clear breakdown, and you have to go to a really long term, but they are entering, if this 15 support level gives out, there's just nothing to 12. So it's just a window. This is a pretty respectable support level, but you just have a window down into that $12 range if this gives out. And I think you have to have it give out.
Is the number 15 for you?
Yes, it's the number 15. Yes, gotcha. It's the number 15. I think you got to go below that 15 to get confirmation, and then how far is kind of up to you. You might even want to go all the way below the low water mark, which is like 1491, right? But below 15 is kind of where my head is at. And then the stops, we're just going to be basically playing the 9 in this little shelf, right? Yeah. And I'm kind of I'm basically thinking they're going to soon converge with one another. So you're looking at a stop loss somewhere in that 1560 to 1580 range, probably, kind of letting that work for you. If you could give it more, but I don't think you're going. I'm not going to because again, earnings are a ways away, but ask me a week and a half from now, I'm going to start thinking earnings are getting close. And so I'm going to be relatively tight for that reason. Ultimately, I do like $12 as that secondary target. First target, I think you're just going down into that 1-to-1. Let's step down into the stairs, go into that 14 for T1. And then, if you want to call 13 T2, you absolutely can. And you're still well over 2-to-1 risk to reward. If you want to call 12 T2, I think that makes sense as well. Either way, at T1, you're doing something from a management perspective, or at least I'm doing something from a management perspective, scale out and or move the stop loss. Again, I don't have a tremendous amount of time. Earnings are still a few weeks away, but that's going to come sooner rather than later before we blink our eye. So just a little floor break. I do think you have to break this $15 floor or there's no trade.
I got nothing to say. It's a clean trade on the $15 break, and it's a clean journey to 12 there, like the setup there, Frankie. My last one, Frankie, I was debating Crowd. I was debating ASK. I'm going GitLab here, Frankie. GTLB.
All right. I see where you're going with that.
Yeah, I'm going GitLab here for a couple reasons. Number one, 30 is the new 20, and we're about to break 30. That's number one. When you come out to the weekly chart, you look at 30 and you're like, oh yeah, nothing. Look, wickety wick underneath those wickety wicks. There's nothing, Frankie, because there's nothing there. Guess what else? There's nothing on any other longer time frame here as well. And so you look at 30 here, and again, this is a volatile big dog stock, not for the faint of heart, no doubt about that. So always make sure that you as the individual trader are okay with that type of volatility, because this one can absolutely move. And because of that, I don't see anything to 20 here, Frankie.
Yeah.
And so when you're looking at this from a daily chart, just going to rapid fire style this here, Frankie, this was a breakdown against the 32 handle. That was a good trade there as well. Secondary setup was at 30. Now you're talking about the $30 price tag. Looks clean underneath 30. This is a bar by bar setup at this point. Your entries underneath 30. Stop loss got to be the gauge against the 9 on the 32 breakout. We were gauging here. Now you're just managing it with the 9. So you're going to gauge the 9 as the stop loss. And like I said, target at 20. It looks like a clean bar by bar entry here there. Oh, yes. Frankie, underneath 30. What's your thoughts on?
Yeah, I love the bar by bar style of it. I mean, the break is clean, right? And I think the 20 is as sensible as a call out as you're going to find in this breakdown. Mm-hmm. But I like the bar by bar, and where you're basically taking risk off fast, right? Even scaling out some along the way. Maybe we scale out of some of the trade at an ATR below that, or a 1-to-1 below that, or whatever the case might be, and just see where the momentum takes us, because we don't know where that's going to be, but we just know if this floor goes, we know there's nothing that stands out. That's what's appealing about it. I really like this one, Maddie. Good find.
Awesome. Chucky, send us out.